Morning, everybody. Welcome to Bonkers Friday after another crazy day in markets. Mental. Can't keep up with all this stuff now. I think I'm going to go and stay in Dale's bunker for the remaining period of Trump's term. We'll get to all that in a bit. First, we'll get through all the rest of the news headlines. Not a lot out and, not out from China and Japan anyway on things. So we're going to jump into some of the stuff that happened yesterday, starting with the Challenger layoffs number, which dropped. There we go, coming in at just under 94,000 versus the 105,000 previously. So a bit of a dip back, looks quite good, but then look at what we're doing here. We're still ticking in some big old numbers at the moment. This is one of the only reports that counted the government jobs as layoffs, even though those people are still employed until maybe August, September. This Challenger report notes expected layoffs or announced layoffs. Doesn't mean that all those layoffs are going to happen. Okay, and as I said, with the government jobs, those people aren't supposed to be leaving until August, September. But anyway, this is all the government stuff coming in here, and that still is a big effect in this Challenger number. The ECB, they cut rates by 25 pips as expected, and as expected, have all but told us they're on a pause. Their forecasts were out as well, and there wasn't too much of change. Growth for 2025 was left unchanged, 0.9. 2026 came down a pip to 1.1. 2027 left unchanged. Inflation, that was where most of the moves were. 2025 now down at 2% from 2.3. 2026 1.6 from 1.9. 2027 unchanged 2%. The core largely unchanged as well, and that got a lot of attention in the presser, talking about inflation, that the core still remains pretty sticky. Lagarde said the ECB is getting to the end of its cycle with today's cut. They've just nearly concluded their policy cycle. We are not confirming a pause, but we're in a good place after the 25 pip cut today, and to repeat that multiple times. And then she said that everything points to inflation settling at 2%. We were wondering whether she was going to mention the currency and whether it's going to affect. They're still not too worried about the level of the euro in terms of what it's doing. The policy vote was almost unanimous. Hawke Holtzman, the standout one there, who dissented from the vote, not unexpected. So by and large, the market took the euro higher on the back of that, because, as mentioned, we are heading towards a pause. I'll look at the price moves in more detail in a little bit. So yeah, it was looking very, very strong yesterday, but things have turned around a little bit today. Then we've got the old sources out afterwards saying that officials expect rate cuts to be paused at the July meeting. So not really a shocking headline, that one. Since ECB meeting, the shackles are off, the gates are open on all the ECB bods, and they all come flooding out like rats out of a whatever. Loads of victory laps going on, as you can imagine. I haven't listed all the individual comments because they're all pretty much the same. Basically, along the lines of that, the ECB has achieved a soft landing. Rates have come down to where they want them to, and rate cutting is nearly done. Now, as I've been saying, what that does now, we've effectively got a pause, although the door's not closed on further rate cuts. We now shift back to looking at the data. Is the data going to support them pausing? i.e. the data is going to start getting better, or is the data going to continue to be weak, inflation continue to come down, and then that will force them into further cuts. So now we're just playing a bit of a speed game in terms of if the data does weaken, how fast does it weaken, how much does it weaken, how fast might it indicate further cuts, or if the data goes the other way. Now, this morning, there was a little bit of a boost for the Eurozone because we got, I think it's the final number for GDP, and the revision is up 0.6% on the quarter from the prior number of 0.3%, year on year 1.5%. So much stronger numbers for Q1. However, that data, because it's revision, it's more real data rather than estimated. It's going to be containing all the trade stuff going on. You don't often see such a jump in a revised number. And this is the, I think, let's say the final or the third revision. So that's probably got a lot of trade stuff going in there as well. And a bit like the Bank of Canada on Wednesday, and Macklin saying that maybe they've borrowed future strength from Q2, borrowed future strength that's shown up in Q1, and so they expect Q2 to be weaker. So Q2 data may not be as positive as Q1 was, but we won't know that for another month or so. Bundesbank, they've come out with their monthly report saying the German recovery is delayed further and the economy is to tread water in 2025. Exports will decline significantly this year and only increase slightly next year. They say GDP is to stagnate in 2025 and grow by 0.7% in 2026. Their latest forecast is for no growth in 2025 versus a 0.2% rise in their last forecast. So Germany still pretty down in the dumps and not expecting any fireworks in their economy. We did get a bit of data from the US as well on the jobs and productivity front. We've got the Q1 labour costs coming in much hotter at 6.6% than the 5.7% expected, and we saw productivity dropping more than expected. So again, higher costs for less work coming in, which is not a good cocktail for the US. The trade balance as well, latest trade balance data, again, reflective of trade stuff, is coming in for April, pretty much over halving what we got previously, because we had a load of imports coming in trying to front run tariffs. So those imports ebbed away. Still negative trade balance, as I say, over half of what it was the month before. And we got a bit of a surprise. We got the Trump-Xi phone call popping up out of thin air. Trump got his wish, managed to get Xi on the phone. Xi told Trump the US should remove negative measures on China and should increase cooperation on economy, trade, and should reduce misunderstandings. Also told Trump that China had implemented the Geneva Agreement and that they agreed to start a new round of talks as soon as possible. Trump, in his own way, talked nicely on his Truth Social platform. Nothing much of note, though, how they're willing to get on and talk further and blah, 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 blah. Exactly what we saw previously, or what we expected previously, that the total sum of that phone call was that they agreed to speak again. So that was the end of that. And then I sailed off into the afternoon, had my dinner, sat down, watched some telly, came back just to check on things, stuck my head in the office, and the whole world had blown up again because Trump and Musk were going at it. Complete explosion for this one. It started with Trump talking about Musk, his opposition to the bill, saying that he knew all the broad details of the bill. Musk came out saying that without me, Trump would have lost the election, and the big ugly bill will increase the deficit to 2.5 trillion. He then started saying, I'm going to be dropping some big bombs, one of which is that Trump's in the Epstein files and this and that, and Trump's tariffs will cause a recession in the second half of the year. Then Trump hit back saying that he should have cut him off sooner, and without him he would have gone anywhere, and he's worried about his tax breaks for his EVs. Then he talked about revoking Musk's federal contracts, and that he should have turned against him months ago, which obviously Musk then threw up, saying that if Trump's going to pull off his contracts. He's going to stop the Dragon spacecraft launch and decommission it and all this. Oh, it all blew up into a big old mess. And then I left that, went to bed, woke up this morning, and everything's tickety-boo again. It seems that calmer heads in the White House managed to talk some sense pretty much into the pair of them, and they've all calmed it down a bit and rode back a bit. Trump is now not decommissioning the Dragon spacecraft stuff, and Trump's talking a little bit nicer as well. We knew this was going to happen at some point. You can't have two people like that in the same situation and not expect it to blow up at some point. But we saw stocks getting hit. Obviously, Tesla got hit as well, down some 14%. That's probably going to recover somewhat today. Never a dull moment for the Trump administration, is it? Now, there's been some other news on the trade front which does involve Japan. Apparently, according to Nikkei, Japan's not happy because the people they're negotiating with on the US side seem at odds with each other. Besant, Lutnick and Greer. Apparently, they've been bickering in front of the Japanese while trying to get through some of this trade stuff. So they're not all on the same page, according to what the Japanese are seeing. And that's not a good look. So that's something that's got to be sorted out, because, you know, one thing about the Japanese, they're very straight down the middle. They don't want to be dealing with anything that's messing them around. And because they're trying to get this shit sorted out, and if they're faced with people who are bickering in front of them, it is not a good look. So something's got to happen there, whether that's Trump again stepping in and moving his chess pieces around, taking people out, putting other people in, or whatever. Something's probably going to come of that. And that's about it from the headline front. As I say, there is a load of ECB heads, but it's Friday, I'm knackered. I'm not going to list them all out. They're all saying the same thing anyway. And what with everything else going on, we should probably just take a look at what's going on in the NFP today. So, and again, this is all political, all this Trump Musk stuff, okay? All the Epstein stuff and everything. I'm not going to get into it. I'm not going to be discussing it. If you want to discuss that in the comments, be mindful. We're here to talk about markets, not to get into deep political discussions. K-Man had to step in on the Face Show yesterday to bring the hammer down on that sort of thing. We're not here to argue about politics. We're here to see if it's market moving and what it might lead to in terms of markets. Right, let's get into the data today. We've got double jobs, we've got Canadian jobs and US jobs. So we'll start with the US jobs. Same old, same old. We're going to be looking, obviously, at the headline number first. 126k expected. Probably a few people might be looking for a softer number based on what we've had from ADP and so on and so forth. So we just keep an eye on that one. Again, the range is, or the variation is going to be important, okay? Even if we get a 50, 60, something like that, yes, it will be softer, but it will still be jobs gains. We know that the US jobs market is in a period of slowing, not in a period of collapsing, okay? So there's still a big difference that you need to be aware of between those two scenarios. But we are also in a situation where the dollar likes to be hit on any bad news. So even if we might get a 90,000, 100,000, that will still probably get a reaction, okay? More so than if we saw 20k miss, it's probably going to get a bigger reaction than if we saw a 20k gain, put it that way. So I think the balance of risks is that the dollar gets whacked on bad news more than it rises on good news. That's my opinion. Obviously, keep an eye on the government stuff in case some things pop into there that we're not aware of. As we said, we've been saying it for a while, the latter part of the year, for when we see those 200, 300,000 government jobs hitting this sort of report, but there may have been stuff going on in the meantime that is going to affect it. So headline first, have a quick look at the government jobs. Then have a look at the unemployment rate, which is expected to come in unchanged. So look for that. Obviously, anything better is going to be positive. So 4 point, even probably unchanged, is probably going to seem a little bit positive. But 4.1, 4.0 is going to be taken positively. But as always, match it off against the participation rate. If participation rate goes up, it can add to people on, or it can add to the unemployment rate. So the unemployment rate can go up. If the participation rate goes down, it's taking people out the labour force. Unemployment rate can drop. Okay, so this unemployment rate can move purely on the participation rate. Obviously, if the participation rate goes up, more people coming in, but the unemployment rate comes down, that is a positive. That shows people are coming in, yet more people are finding jobs, and vice versa if it goes the other way. So unemployment rate, match it off against the participation rate. Then the only other thing I really look for is the wages number. And where is it? Where's the year-on-year number? I'm going number blind. There we go, 3.7%. So it's been coming down a little bit of late. Just have a quick look at the chart here. It's not going anywhere massively. We're still hovering around the high threes into that 4%, but it's just started to tick down a little bit over the last few months. If we get a big soft number, if we get a number right down near 3%, that's going to get the market thinking about the Fed looking to ease again, because that's sucking out a big ton of inflationary pressure. Okay, so look for the wages number in terms of inflation and how the Fed would react to that. Obviously, if it goes up, that potentially keeps the Fed on hold for longer. So that's how to watch the US data. Canadian data, pretty much the same things to look at. Look at the employment change first. Is it good? Is it bad? Look at where those jobs have been won or lost. It's worse if you see bigger moves in full-time than if you see them in part-time. Okay, unless it's job gains. If all the job gains are in part-time, it's not as strong a number as if all the gains were in full-time. Again, unemployment rate, this again has been ticking up recently. Let's get that chart up so you can have a quick butchers. As you can see, we've been slowly ticking up for the last couple of years, okay, and continuing to creep higher. So that's something the Bank of Canada will be a little worried about. That's expected to go up to 7%. Again, keep the participation rate in check for how you work out that number, whether it's good or bad in reality. So that's both sets of jobs numbers. You shouldn't need anything else from that, but if you have any questions, throw it up in the chat room and we'll have a look at that, obviously, or answer that question, or throw it up in the Zoom chat here. Right, so what are we going to get reaction wise from markets? I think the best bet, because I'm on my Todd today, so I'm just going to do a brief run through some of the pairs and just highlight some of the key levels. I also just want to bring to your attention that there is a 2 minutes silence happening or being respected today here in the UK and probably across Europe as well. This is for D-Day, the 81st anniversary of the D-Day landing. So at 11 o'clock, I will be shutting up for 2 minutes. So if things go quiet, you'll know why. I'll pop a little message in the Zoom chat just so anyone coming in wonders why there's no sound. So that's what we're doing at 11 a.m. So roughly 11 minutes from now. So yeah, going to go through some of the pairs. I'm just going to do a sort of whistle stop tour just so we can note what's going on. So going to start with euro dollar. So yesterday we had a run up to the 115 level, okay, and slammed into the level round about 94.95 yesterday. That was it. That was the top, and then we've come off since, and we've seen this a lot of times. News, data, central banks, whatever, we get a move, and then when it hits a level, it runs into that level, and then if it doesn't get anything else, we move away from it. So we're pretty much back where we were before the ECB, and where we've been for most of the week, round about this low 114s area. Same situation now. We're a good, 80 odd pips away from that 115 again. If it's bad data and we can't break that, we test and we can't break it, that's going to show you how solid a level it is. If it's bad US data and we do break it, it's got to hold that break. Okay, so I would potentially go with a buy stop any other time, but I'm not going to do it if it's a data-driven move, unless we see a break and it starts holding. And even then, I might just not be too keen running a position like that into the weekend. I don't need to rush into any positions to try and catch a move. If I miss it, I miss it. That's trading, you move on. But this 115 is going to be key. People are talking about 116, 117, 120, whatever you like. You can't do anything unless that 115 breaks. So look at it for the data, the initial data reaction on a bad number. Can it break? If it breaks, can it hold? And where are we going to close the week? Are we going to close the week above it, or are we going to close the week below it? Now, even if we can't get through it on bad data, even if we do break it and fail, does that mean we're going all the way back down to 112, 110 or anywhere else? Not necessarily. We're still in this uptrend since May, and we're still in the bigger uptrend for the year. Okay, so there's no signs of this trend breaking or turning yet. So we've got two trends, shorter term one and the longer term one. So even if we do fail here, it doesn't mean we're going to come back down to 112. We may do. We may get some headlines, or Trump saying something, or Europe saying something, or trade deals or whatever, and that will cause a change in the narrative. But just without that input, yeah, another failure. We may get a pullback. It may go through 114, but I wouldn't be expecting it to, go massively to the other way. What's possible is that we continue to see this sort of price action where we just make these new highs, we pull back, we try again, we pull back. So we are possibly looking for a break of 115 just based on the prior price action. And whether it happens today or not remains to be seen. I'll only trade it by what the price does, not what I think it may do. Dollar yen, not got an awful lot of interest in it here in the middle. I'm going to be watching for these two edges, the 142, 141, 70 zone, the 145 zone, and potentially up again towards this 146 area as well. Again, I'll play that, or potentially play that on a can we break, can we hold? If it breaks, what happens after? So I won't just blindly trade the level just because we've got there. I'll judge the price action at the time. And this is what all you guys should be doing today. Go through your charts, whatever assets you like trading, pick your key levels. Okay, you could have loads of different levels, moving averages like I've got here, boom, 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 trend lines, whatever. Okay, you can all have your lines on your charts, but you need to think about which ones will come into play. If we get big data, if we get a big variation, which are the ones that are going to really be in the mix? It's not going to be all these ones 10, 20, 30 pips away. It's going to be the levels further away. So that's what you need to look at. That's what you need to plot. If you're going to try a counter trade, if you're going to try and run with a trade, then you need to pick your levels where you're going to do it. Okay, wait for them to break, wait for them to hold, wait for the price action to confirm it. So forget your near-term levels for now, your shorter-term intraday levels, scalp levels, whatever. Pick your wider levels. Just note them on your chart, note on a piece of paper, just so you can monitor them and see what happens if the price gets there. Cable, very similar situation to euro dollar. We've had a move high, fresh high, got through 136. Now we've got to pull back. Where's it going to pull back to? We've got this level 135.20s. We know the big figure is going to be in play and the half figures and everything else. So again, just plot your levels. I'm just going to go on to a bit of a wider one here. If I can bring it in, because it's a bit wider than that. My next level up here, 136.50, 60, just comes across this level that we've had previously, a lot of action at back in 2021, 2022. So it was a bit of a break point, and then it became resistance for this complete move down. Okay, so this is one of those levels. We haven't been there for quite a while. We may have a bit of a say if we go there again, and we're not too far away. 100 pips for cable for that one. If we're getting above there, we're going to be thinking about the 140 level any which way. So in the short term, I say probably 134 is going to be a possible stretch point if it gets that far. Maybe 134.50, that old level from where we are now. So monitor that. Again, if it breaks higher, it's got to hold the break higher. Now the loon is going to be interesting over this one. It's probably the most dangerous pair to trade because we've got both jobs reports, because you can have one coming out one way, one coming out the other way, both coming out the same way. And, you know, it's going to cause different reactions. First things first is that the US data usually outweighs the Canadian data. So if there's a big variation in the US data, it's going to outweigh whatever's happened in the Canadian data. But you've got three scenarios for this. Okay, you get good US data and bad Canadian data. Okay, then that's going to be bullish for this one. The opposite is true. So you get bad US data, good Canadian data, then it's double bubble to the downside. In the middle, you've got, if it's mixed ones, you know, if they're both good or both bad, okay, then it sort of nullifies each other. But again, you take the US data over the Canadian data. Now, price-wise, I was trading this 136.50, and I decided to tighten my stop up yesterday to 136.35, and guess what the low was yesterday? 136.35 was the low. So I got tipped out at the low because I was thinking that if we did break this level, we might be going down to the low 136s. So I became a victim of the old thing I tell you not to do, which is the I think trade. Okay, so I got knocked out of my stop, and now we're back above it. But I'm not that bothered because I moved my stop. I just made a decision, and if it had gone on to 136, I would have been patting myself on the back for saving myself some pips. Okay, so it doesn't matter. What happens next is what matters, and how we trade it next. So we've had this little fake out, whatever you want to call it. So it doesn't mean that we're done with the 136.50. But if we get a test today over both US and Canadian data, and it holds again, that's going to cement the level probably, and then we might see a bigger bounce off of that. So that might be something I'll look at. 30 pips away though, forget it. We could, you know, go through it by 60, 70 pips and jump back above it. So again, this is probably, this 136.50 is more a level you're going to look at as a pivot and see where we finish. If we finish above it, then it's going to cement up as support. If we finish below it, it might be the kicker that gets us going much, 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 much lower. I know Blake's looking at some levels way below, you know, talking about 34s, 32s, 30s even. Okay, which it may be, but there's a lot of traffic down here. If we do get through this 136, we've got a load of stuff around the 134s. My big level below is way down at 132s, which is another one of my longer term big levels. It's a bit messy. Let's go into that one. If it's there, 132 there. Yeah, there we go. So it's a bit of a big old pivot area down here. It doesn't look too clean, but if you zoom it in and scroll along, then you'll see that it has a lot of action in there, that 132 level. So that's the next one to keep an eye on for that. Right. What next? Just a quick one, and then you've got 30 seconds to go before we go into silence. So go look at Euro Sterling quickly. This one, it's still consolidating sideways, but it's still positive while it's above 84, but we can't get through this 84.50, which looks to be protection in the 84.60. So we're stuck in this tight range for a moment, and but I would say it's looking a bit bullish because it's holding that 84. 64 level. Right, folks, 2 minutes and I'll be back. Thank you for your consideration, folks. It's always good to remember what people fought for to give us what we've got now. And that's why we take a moment just to reflect on that. Thank you very much, everybody. Right, let's get back into it. And again, please, if you've got a pair asset you want to talk about, throw it up there. We'll have a look at it. Derej wants to look at Guppy. Yep, I'll have a look at that in a moment. Going to kick on to Aussie dollar first, because here we are, another situation. We've had a go. Everyone thinks, here we go, this is it, this is the break. I know Ali was talking about it yesterday. Was I going to buy a break, 65.10, whatever? Boom, we run into an old level, and that becomes the top again, and then we undo all the good work and come back down again. So this pair just can't hold a break. It's still looking positive, okay? You know, we're not making massive moves here, but it's still just trying to keep edging up. So again, a bit like the euro, you know, the bias is still that we are potentially going to get an upside break unless something materially changes. What's going to be interesting though, if we do, and again, this is potentially going to happen on the data, or could happen on the data. If we get good data, do we get a move down to the 64.40? That will be something I'll be looking at for picking up if we get down there and hold and test and hold that, because that would be probably the biggest signal we've had throughout this whole noise going on here. You know, we had a hold here, bounce, then a failure, and then failure. That was over the space of what, Friday to a Thursday, so just under a week. Okay, this will be a bit longer. The breakup Monday, we've come all the way through. Coming into next week, if we're holding it, that will be potentially a longer hold. May not matter, but it's just something to look at, you know, how long it takes between holding levels. So if we do get a test down here, even down to this 50 area, and it holds over the NFP, then that will be something I'd consider maybe taking along there, because it would be an indication that maybe we're going to be going on for a break up. And I think if we get a third quick move up to here, these highs, then that's potentially the one that will be the blower, and then we might be off and running again. But there's still plenty of levels in the way for this one. We've got the 61.8 fib, 65.50, which was also a level all on its own around there. So you can see why we've got a bit of traffic, a bit of resistance up here, purely going back to October, when we support, break, fake, break, hold. Okay, that's why this is a sticky area. So we've probably really got to clear that fib as well, let alone this 35, 37 area. But yeah, I think I'll have another go if we tap that 64, 40, 50 area over the data today. Derej, you want to look at Guppy, which I probably haven't got much going on in it. Not much to say about this one. We're still in this uptrend. We still can't get through these high 195s and hold a break above it. But we are finding out that we're getting these higher lows and we keep coming back here. This could be third time's a charm. But again, be careful of another fake out if we're going to move up here. What you want to be looking at is a hold, and a significant hold. Get that, then yeah, we're probably off and running 198s, 199s, 200s, whatever you want to look at. But for now, again, watch this over the data. Guppy isn't a big one. It's going to move on more on probably dollar yen and the drag from yen rather than the pound. So just, if you're watching this one for the data, just be a bit careful than that. Swiss yen, bloody hell, David. God, keep me on my I don't even know if I've got it on here. Let's have a look. It might be down the bottom in the hidden pairs that I just look at now and again. Nope, not even there. Let's see. Let's just call it up. Ooh, yeah, let's pick that one. Little bit of a similar situation to Guppy. where we've had these highs, can't get through it, so you know where your risk is. What are you doing in it, David? Same you, Deresh. What are you doing in it? Let me know. We are still maintaining this uptrend. You probably call this a bit of a wedge forming here. Let's take that. It's going to be rough as anything. Something like that, and something like this. Oh, and something like that. Oh, fucking hell. You do give me our time, you lot. Something like that. You know, it's not perfect, but you get the picture. The Swiss is a bit of a messy one in first and foremost because, you know, it's giving no help to the SMB. We're still seeing plenty of strength in it. This one is just I don't know how to play this one, to be honest with you, David. It's like both risk currencies tied together. So, and trading the fundamentals between Swiss and Japan, not my cup of tea. I'm leaving it. I'm leaving it at that, mate. You got a wedge. Tell me what you're doing with it. You're short 175.37, so pretty much right at market here. What have you got there that's made you go short? You've probably got something that I haven't got. Let's chuck a fib on there as well. See what's going on there. Yeah, what you got going on at that level, mate? Let me know. No, Brand, it's not the most manipulated currency. Well, it is the most manipulated currency, but it's not, according to the Treasury report, which actually dropped yesterday, the biannual US Treasury report on currencies and countries. No one has been accused of manipulating, but the usual suspects are still on the monitoring list. That includes Japan. Mr. Kato would have had a sigh of relief that they weren't called manipulators, but they're still on the monitoring list. So that one, no, nothing to take from that. Not that the Swiss would give two Fs about being on that list. When Jordan was in charge and they got put on the list, he basically stuck his fingers up at it and said, jog on. Yeah, the both are safe havens. So how does that work when there's a risk move for Swiss yen? Right, get away from that one. Moving on. Silver's having a little bit of a bust up as well, another leg higher. I know Kay and Stell were more involved in this one, but charts are charts, so I can have my own opinion as well. We're into some fairly big levels coming up as well. First and foremost, we've had this break. Okay, so this is your most important level at the moment. I haven't adjusted my fib up yet. I'm just leaving it for now. But we've had this top, had a close hit, then we had another hit, and then we finally got the break. So this 34, 86, 35, call it, is going to be your most important level moving forward. If we come back to that, test and hold, that's going to confirm the break. Then where we go from there, sky's the potential limit. Now, just want to show you some of these higher levels here. So this next level that we've gone through, 35.5, is just coming across the tops of some of these prior monthly highs, monthly candles, just around that area. Okay, they're not all exactly at the same level, but they're there or thereabouts, 35s, 50s, 60s, 40s, whatever. So the next one above that is that big monthly high, February 2012, just one to keep an eye on. But coming into the shorter term, you can see how we're just turning around this level a bit as well. Okay, so this might be an area of support you need to keep an eye on if we do pull back. Okay, we've had the break, had the move under, then a little bit of mooching around, and then we've just had a little hold there. If you can see that, just in there, or two little holds, three little holds potentially. So that's going to be a level to keep an eye on for dips. As for where the top is, don't ask me that. You know, I don't know. You don't know. No one knows. What you need to see is some evidence of a top. So I'll get my little squiggle out. You know, this isn't the sign of a top. This isn't the sign of a top. What you want is something maybe like that, where you come down, bounce, retest, and then maybe you see something like that happening. Okay, so you want a good amount of time between, call it a double top if you like, or confirmation that we're not going up through a prior high, whether it hits that high or just comes in just below that high. that's your indication for trying to pick tops. Okay, but that doesn't mean we're going all the way down here. We could just pull back to this level and then go on and make the high again. Okay, but you need to get that price action evidence before you think about catching tops. So we've got a little bit of a marker at this high. You need to see what happens on a retest. If you're looking at something like the hourly, you know, just having another test there and hold, that's probably not it unless you want a little quick scalp. But you want to see something over a few sessions, even over a couple of days. Let the price action do its thing, show you what it wants to do before you start trying to get clever and trying to pick where the top's going to be. The top could be here. The top could be another $5 above. We just don't know. One of the reasons I think this is moving high, this is still in the falling into the basket of this China export curbs on rare earths and all that sort of stuff. Silver isn't a rare earth, but China is one of the biggest producers, second biggest producer. Peru's not far behind. So it's just another commodity that is in that if China's going to mess around, this is one of the ones that they have a big hand in. And I think that's what's playing in to this move higher. Plus, we've also got a technical break. Still, when the others have been talking about the gold-silver ratio, which has a big effect on how people trade things, so that's in the mix as well. Doesn't matter what the reason is. All you got to do is follow the price action and let the levels do its thing. Yields, keep an eye on those today. As I was talking to Dale yesterday on the face show, we're looking weak again in yields. 450 is your number up here. If we're seeing anything up to there, I think that's going to be a solid level. If we get crap data today, and I mean really crap data, then this is probably going to be down at 420, if not more thereafter, and that's going to drag the dollar with it. So if you're trading the dollar over the data, keep your yields chart open as well. Keep an eye on that one. Quick look at stocks. We had a little tickle of this 6,000 level, but again, we can't get through, so we're not ready to do it yet. So again, picking tops, this is the sort of price action you want to see. We've had a high, we've got up there, we've just nicked a new high. That's not so good, but it came ahead of that level. Then we've had a pullback. Most of this pullback was all the Trump Musk news. So now that's been brushed under the carpet. I wouldn't be surprised to see us returning higher again. I want to know what this does on bad US data if we get it. Does bad US data mean an easing Fed, which stocks always like, and then another rally and we go through 6,000? Or does it mean that there's problems in the economy and then we might see stocks reflecting that? This 59.10 level still looks pretty important. We're still above that and holding it. Couldn't quite get there in that move overnight. So it is still a significant level in the short term. But I think if you get another break through here, then it might have some legs, and then maybe we go and look at the 6,100 highs previously. Yeah, going back in silver, 35.40 is your monthly level. Keep an eye on that too. David, what they class as rare earths, it's all the funny stuff, geraniums and all this, the funny stuff that's not in mass supply, shall we say. Things they use in chips, electronics, and all sorts of other stuff that China has a lot of. I mean, obviously, it's one of the reasons why there's all this kicking off in Ukraine. It's not just about what Mr. Putin is saying. It's about all the minerals that Ukraine has a lot of, and they're all on the side, funnily enough, towards the Russian side, which Russia's trying to take over those areas. Yeah, that's what the rare earths are. They're all little funny mineral names and all sorts of stuff. So probably best doing a little Google for that to find out exactly what germanium or whatever it's called and all this little stuff. But you're in our chat room as well. I know Mark knows a lot more about that sort of stuff. He may not call himself an expert, but he's our expert anyway. If anyone wants anything, go and ask Mark. Right, quick look at oil, and then I think we'll call that a session if I can find it. It's up here before the bonds. Here we go. So we're still in a situation, manufacturing still in the doldrums, demand is still pretty much in the doldrums, and now we've got this OPEC or the Saudis wanting to ramp up production, but we're not seeing oil dropping back too much. Brent, which is obviously more related to the Saudis, is a bit more sideways looking. Still pretty tight. I mean, oil, you know, oil, I remember when, 50 pips was today's 5 pip moves, one buck moves, really quick stuff in oil, but it seems to have lost a bit of volatility for this one. But it's still not going down, this news. I think the geopolitics, what's going on elsewhere, all this stuff with Iran and Ukraine, everything else, is perhaps just stopping this one from falling too far. So this is one where you think, okay, Saudis and whatnot want to ramp up production, but it's not going down. That's a signal in itself. So it's looking like it wants to have a little push higher. 65, high 65, 66 is the number you want to look for. Just keep an eye on these two highs across here, 66, 60s, 70s. Again, Mark's going to tell me off for looking at a continued contract instead of a future, but we've had that argument before. For the US side of things, the level is pretty clear up here at 64. Get a breaker there that holds, then we're probably going to be up 65s, maybe even higher, testing up this zone up here, 66, 67, which was a big old break point previously. So it's likely to be a bit of a zone on the way up. Right, that's it. I'm done. Thank you, as always, for coming to the Flow Show this week and giving us your support. I hope we've done you proud and done you okay with our analysis and our news and opinions and whatnot. If you're in a chat room, you can ask more questions there. Don't forget, you can take up the offer, $1 for 10 days, get yourself in, cover yourself over the NFP and whatever happens next week. And have a great weekend, everybody. And I'll see you all next week. And I might drag in a couple of guests, seeing as K-Man's off for a couple of days. So we'll sort that out next week. Have a good one, everyone. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.